What's up, everybody? It's Stephen Williams, founder and president of the creditrepairshop.com, and I wanted to talk to you today. We're going to talk about the debt that's released into the market. They had some small accounts, but what the thing that is, I don't want to say interesting, but dangerous, I would say that, about these type of accounts is that they're easy for people to be able to collect because they can hold. This is how they can hold people back from being able to move forward. Especially when it comes to banking, it makes people lose money. So the first one is just a jewelry account. Charge off dates 2012, past statute of limitations for most. Average account was only about $979. So these are probably small jewelry stores. It's a mix, all 50 states. It was only 333,000, so 340 accounts. They're selling it for $3,000, which is, I mean, they shouldn't even be able to collect any of these with the charge-off date on most. I mean, not to say that it's not going to be past the 10-year statute of limitation or that 15-year with the state that has a 15-year one. The second group, though, is the one that I was speaking about. This is a mixed portfolio of bank overdrafts. And what happens in the average account is only $215. It's 375,000, 1,740 accounts. They're selling this one for $3,000 also. But the thing about this one, this is the one that holds people back, because if you can't open up a bank account, you end up going to check cashing places. You end up paying high fees to be able to cash your check. People are using these debit cards to have their accounts, to have their check put into, but they're paying fees when they're using that card. And when you add that up over a year, I mean, these could be taken anywhere between $1,000 and $2,000 worth of an individual's money that could be put towards retirement, could be put towards savings, could be put towards an emergency fund. All of these different things that it can that money can go to. So, and crazy thing about this charge-off date on these, which they consider it like a charge-off, but it's not really a charge-off, is 2008. This is 100% past the statute of limitations. But what will happen is, for both of these, they're going to try to get people to reset the time on these debts by making a small payment, by making some type of contractual commitment to pay, and it'll start the time frame over for the statute of limitations. So if you receive anything like this in the mail from this or anyone else, and I'll always review this in my videos because there's always someone new that has this situation. For you that don't have it, this is just a review, so it can be top of mind if it comes up. You receive a debt collection letter in the mail from a collection agency that has purchased debt. These are going to be purchased, not owned by the original creditor. You need to look at the statute of limitations laws for your state, for contract laws, and this goes even for the checking accounts, on how long they have to collect it. And then you look on your credit reports and you look at the original charge-off date on that. Once you see that it is past statute of limitations, you need to send them a letter notifying them that you know that it's past statute of limitations, that you want them to stop and cease all collection activities. It's simple, straightforward letter you send to them. 100% they're going to stop coming after you because they don't want to lose their license. When it comes to the checking accounts overdrafts, you're going to have to deal with that with the check systems also, to have them take it off your name off of the file because it's past the statute of limitations for being in check systems also. You're going to have to do two things on that because you don't want to have that come up on you when you try to get a bank account. Also, you need to submit it to the bank that placed it on there to have it wiped out of their system because it's past statute of limitations. They may not allow you to open an account there because that's their, that's up to them. But they cannot have that in their system as a debt that is owed, or trying to sell it off to another company that's owed, that saying that you owe it. Also, if you don't notice, I'm in my office. I came in for a couple hours today, got to see my employees face to face for the first time in more than a month and a half. So I'm happy about that. So now, what I want to do at the end of this video here is talk about something that personally happened to me, and I think it's going to help you be able to move forward, because what I'm seeing with a lot of the questions that people are asking me, and we're going to answer those questions too, is that people are still not, for some reason, getting in their mind that they control the outcomes that they have. Like, they think that everything is from external, and they're just don't believe that they have any control over repairing their credit, have no control over getting out of debt, have no control. They're just reactive. They're not proactive. And I want to tell you a story about something that happened, and I want you to ask yourself as you hear this story, this is a true story that happened to me and my family, is that, do you think that this was luck, or do you think that this was because me and my wife, my family, we always have been focusing on that we're in control and that we make things happen. So about it's going on more than 20 years, almost 20 years, we had a new house built, and we, it was, while it was being built, it was actually built by another person, and then we were going to buy it from him. And when we went to get somebody was sitting here on there. when we went, so we had to put a large amount down on the house for it. It was, I think at that time the house was $352,000, and so we had to put a large amount down on the house. And then, closing date came. My kids were all happy. We had just finished everything that happened in the 90s, where we were getting out of debt. In 1990, from 2004 to 1999, we were getting out of debt, getting our credit fixed, where we had to get ourselves back in order and move forward. And then we were buying this house. This was going to be our house of the future for our children, for us, everything that we wanted. And we put the money down, and then we were getting ready for that closing date. We were in the house. This was a house that no one's ever lived in. It's fresh, everything we wanted for the house. And I can remember my kids and my wife. I was going to the closing, and I was the only one that was going to go to the closing, and then come back. We got, everything is done. It's 100% ours. And before we were going to closing, my mortgage person called me and said, you have to bring an extra $8,000 to closing. And we were like, okay, we just put all this other money down. We don't want to take, what are we going to do? We had some money put aside, and we grabbed that, but it wasn't $8,000. And this is a true story. We literally broke open my kids' bank to get I think it was another $200 out of there, and then some of my other my business account. At that time, I only had one business. In my business account, we took money that was supposed to be used for paying other stuff with that business, took that, and we had $8,000. Somewhere it was like 8,000 and some change. We had it. Got a cashier's check at the bank, because the mortgage company said they're only going to take a cashier's check, so don't come in there with a check, personal check, or it's not going to close. So we went there. I went there to the bank, got the cashier's check, went to the closing, and we had it. And I think that this is the reason why I'm saying this story is this is like a test. Everything that happens to you when you think that is something bad, it could be a test to see if you really want something. So I had a cashier's check. We at the closing table sign everything. People that we bought the house for, they're all happy because they're making, no telling how much money they're putting in their pocket. But I got this house because I could not go back home and have my kids and my wife be upset that we did not get this done. And but so sign everything, and then right at the end, before uh, we were finishing, they gave me a check back for like $8,500, and I was like, okay, are you sure? They said, that's yours, $8,500. And so we had went through that to get that 8,000, gave that check to them, and then turned back around and they gave us a check for $8,500. When I went home, I told my wife, I was like, look, they gave us this back, $8,500 back. And she couldn't believe it. She was like, are you sure? I asked them, I double checked. They said, that's for you. And and we got our money back, put the money back into our kids' piggy bank, had to buy them a new one, put that money back, put money back into the savings, paid what was supposed to get paid from our business. Everything was back to normal. But let me tell you what the backstory on what happened with that. That like 2 months later, they sent us a letter saying that it was a mistake, that they made a mistake with that, but because because when you go through that process with what do you call them? Uh, uh, I can't even think of the name of who does the title company. Because when the title company does stuff and they're paid to make sure the disbursements are right, everything that happens is right. That what once it's done and over with, if any mistakes happen, it turns out that they're responsible for it. And so when everything was said and done, I got to keep the money, and the title company's insurance company had to pay that difference. They had to pay it. And so what I think that whole thing happened to us because it was like a test to see that we, number one, did we really want the house? Were we going to follow through, or were we going to say, oh, things just always go wrong for us? It's just like seeking out something bad to happen, or were we seeking something good to happen? And what I see people doing when they're looking at fixing their credit and getting out of debt is that they're setting up, and I had a video about this already, but I'm going to repeat it again for you that need to hear it, is that what happens is that people start the process and they start to look for bad things to happen. And when that thing happened to us for the house, that was like a subconscious coming up to like say, do you really want it? Or the universe saying, do you really want it? And what happened was we made it happen. We were going to come up with that $8,000 that we needed to come up with no matter what. We came up with it. We went to the table, and all of a sudden they gave us $8,500 back that we wasn't supposed to get. And then when all of the mistakes were figured out and finished out, the title company's insurance had to pay whoever that $8,500 was supposed to go to. They had to pay it out of their insurance. They said, it's our mistake. They told me and they told the seller of the property that it was their mistake and that their insurance had to pay it. So I'm sharing this story with you because this is what, when I try to tell you things about how you subconsciously sabotage yourself for success, subconsciously sabotage yourself for repairing your credit and getting out of debt. These are the things, the ways that it happened. Like it's gonna hit you in a way that you don't understand, and you have to push through it. It's not like you're fighting something. What you're doing is you're continuing moving towards what you want to achieve, and dealing with what happens. You don't pretend like it doesn't happen, but what you do is you don't dwell on what happened. You move to the solution and you get it done. So I'm going to end the video here. I hope everybody is having a great weekend over this holiday, and keep moving forward. If you haven't subscribed to my channel, please subscribe. If you need help with your credit, please visit thecreditrepairshop.com. If you need your reports and scores, because everything starts there, go to the number 3scores.com and post your questions, comments on here. And let me go ahead and answer some questions here. We have one here that says, "Hey Steve, collection company sent my medical information. Description, what do you do about HIPAA?" You just notify them that you want to get the information. This person said that collection agency sent information about them with their that they owed medical collections. And so what you do to the bureaus is you ask them to ask them, and you also ask them in a letter saying, show me how where I authorize you to share my personal medical information with anyone. It's going to come off. It's not going to make the debt go away, but it's going to make them take it off your credit reports. Someone asked me about Credit Sesame. All of the monitoring services seem to got stuff in order now. They're getting the information up to date. They may refresh at different times, but it's lining up. Something that I learned about TransUnion, no matter what monitoring service that you use, TransUnion will update a lot faster than all of the other bureaus. So if you have something that changes within that month, if it's, I think they said if it's more than like 10 or 20 points, I can't remember the conversation that I had with them, they're going to make that update on a daily basis for you. So that's why even on Credit Karma, you could see that your TransUnion will move up, and then you don't see anything on the other scores, and then they'll send you an email later showing that you had an update even on your other the other one that they offer. What's the best way to get in contact with you? What you call our office at 866-803-5781. 866-803-5781. That's how you can get in touch with us. Here's another one. Debt collector is a dirty business. I would like to have entire debt collections shut down. Let's see. They're saying that the best thing for people to do is to not buy stuff. This is another one where people are saying, where they're saying stuff like, don't buy stuff, don't get into trouble. Of course, and I can appreciate you saying that to people and believing that way. But what you have to keep in mind is that different things happen to people at different times. I'm gonna get my battery thing on here. People are going through hard times right now, and for any number of reasons, they can fall behind on their debts. They could lose their job. Anything could happen. And you're right. You should always be focused on solutions. You should always be focused on what responsibility you can have and take to not get in certain situations. But I've fell into it before, and other people are falling into it, and we hope you never fall into it. But yeah, debt collection business is a dirty business. Someone asked me, do I offer a course? Yes, we do have a, if it's for credit repair business, I offer a course. And also, if you're looking at where we have a course for repairing your credit, yes, go to my website. At the bottom, you can click and then search for my membership program, and that's only $1 to start, $19.99 a month. It shows you step by step in my video, step by step, how to repair your own credit. Here's someone here, paid a debt collector 9 years later, and they didn't know about the statute of limitation. They paid $12,000. I think I answered this one in another video, but I'll answer it now. If you paid a debt that you didn't know was past statute of limitations, you got a 50-50 chance. Most legitimate debt collectors will let you get the money back if you notify them that you are now aware of your rights, that at the time that you made a payment to them that allowed them to reauthorize the debt to make it start the statute of limitations over, you can let them know that you at that time you did not know your rights, and that now you do, and that you want them to return that money, and that you will be notifying, if it was a summons or a court summons, notifying the judge, or if you're just paying them and it wasn't a court, didn't go to court, and you're just paying them, you notify them and they should return all of your money. I talked about a debt collection, a person on YouTube that was getting paying a debt collector for a student loan. They notified them from the information that I shared with them, and they got their money back 100%, all of the payments that they had made, and the debt was forgiven where they didn't have to make any more payments on that student loan. Here's one here. Why is it when you have a credit card with a company that goes bankrupt or closes stores, your scores go down and for the lack of use? That is crazy, yeah, because it's not an active card. The reason why the score can go down is because it's not going to be an active card anymore. And what they're going to, the credit scores are figured this way. They're going to look at what you have available to charge and what you're utilizing on that account that you can charge. So if you have $1,000 that you can charge and you're using 90% of that, $900, your score is going to hurt your scores, because they're going to say your utilization is too high. If you have $1,000 and we always tell people to only use 25 to 30%, you'll see that your scores will jump up because of that, because they're saying you're managing your finances better. It's wrote into the algorithm. When an account closes like this one, even though that company filed bankruptcy, you don't have any open lines of credit with them. You only had a balance, or you're paying that balance to whoever took over that bankruptcy. Or if you don't have a balance anymore, it's still not an open card where you could use that credit, because they're going to base it on what you can use also. That's why that would happen on there. All right, so now we're going to finish the video. So if you have any questions or comments, please post them here. I will catch up on answering the questions here. Just been a little busy this week. And hopefully things will be getting back to normal for everybody, and even for myself. So this is Stephen Williams, founder and president of thecreditrepairshop.com. And until next time, thank you.